Everybody, welcome to this Informed Investor Report. Got a few more charts for you. Obviously, a lot of volatility, a lot of news, headlines seemingly every hour of every day on the war in Iran, sending markets up or down at any given moment. So I thought I'd jump in. We've probably shared a similar chart to this, but volatility in the stock markets, like I've said, numerous days where we're up or down 2%, and even a few days where we start one way and end a complete opposite. So just a reminder that going back, this is to 1928, so almost 100 years now, 56 times there's been a correction of 10% or more, 30%, 15%, 22%. 20%, so that's where we triggered the official bear market. So 22 times that's happened, almost a quarter of years, and you can see going all the way through only 3 times 50% or worse correction, but of course we've always ended up higher in the long term. So a bit of the price of getting those higher returns in the equity markets is sitting through some of that volatility. We of course haven't even really, although we've had lots of days, big days up and down, they've averaged out a fair bit over the year, and we're really not that negative, even if we look year to date. But we obviously have had a bit of correction from the all-time highs going back into January. Looking at some of those corrections, you can see we didn't officially hit one in 2025, despite being very close to that 20% mark. But looking at midterm years and how those corrections have happened. So back in 2022 being the last midterm year, down 25% at that point. But look at 1 year later from all of those corrections that we saw in midterms, and you can see the average 1 year out. So again, we're not through midterm years, so not to say it can't get worse before it gets better. But lots of rebounds coming out of those midterm years where you see a lot of uncertainty with what's going to happen in those midterm elections. Looking at the 4th year of a bull market. So we are in that 4th year going back to 2022 when the markets last corrected and came out of that bear market. So far in the first 3 years, that 83% return to the upside. So obviously positive there. And there are a few cases where we do have a negative in year 3 or year 4 of those bull markets, but you can see the average there in year 4 is a 14% return, and 85% of the time markets have been higher in the 4th year of a bull market. So we aren't there, but again, we aren't that far off really in the grand scheme, because we had those early returns in January and just this recent weakness. 6 years ago, not today necessarily, it's a few days old, but 6 years ago that COVID bear market ended. So feels like a very long time ago, but going back to 2020 and look at the returns that we've had since then on some of these bull markets. So you can see the average of a bull market being 5.5 years. We're 3.3 years in. And the average return 191%. We're only at about 95% from that bull market. So of course there have been cases that have been shorter and not run as high, but numerous cases much higher, and the average much higher. Just a piece of interest there that numerous bull markets in these in recent history have started in October, including the one that started in October 2022. I'm not sure how relevant that is, but interesting that out of a small sample size, 5 of the 12 started in October. Some interesting charts for you. Obviously, we are just about a quarter of the way through the year here, so small sample size, but these are the daily returns. And you're seeing this in volatile times, lots of news over the weekend, and seemingly positive news that comes out over the weekend has meant a very positive Monday so far, whereas leading into the weekend, especially Thursday, for some reason, that negative news coming forward and the market's suffering. So these are the annualized returns if you take the returns that we've seen thus far on any given day. And you can see Monday and Wednesday positive, Tuesday, Thursday, Friday negative. We'll see if that trend continues here as we move through the rest of the year, but interesting there. a chart as political minds go, everybody blaming each other for the increasing size of the debt and the deficits, and this is not solely a U.S. issue. Of course, pretty much every country, but you can see how that debt's increased over time, no matter who's been in charge, and with really no end in sight here, as we've obviously got Trump's second term as president, and that debt continues to rise. But it wasn't exactly falling with Obama or Biden either, with the seeming response being just push that debt down the road for somebody else to deal with. So probably not a great long-term strategy, but I thought it was interesting to just see how that debt continues to increase here. And another piece here, a lot of talk about the housing market. So home buyers historically low right now compared to the sellers, which of course was the exact opposite. You can see there, going back into those COVID years, 2020 through 2022, way more buyers than sellers. That's flipped, and you're seeing that in a lot of markets, especially here in Canada, in the Vancouver and Toronto markets, for sure, with a lot less out there as far as buyers coming to market and a lot more sellers. Also a demographic piece, as many who have had homes aging out of those and looking to downsize. So interesting there. We'll leave you with that for now. There'll be lots of headlines coming out, so we'll probably get a video out to you sooner than later. Any questions, of course, always let me know. Thanks a lot. We'll chat soon. Take care.